Good evening, everybody, and welcome to SmartFX webinar. This is Almas and I'll be talking today about types of traders. So now I'm welcoming everybody for this beautiful session that we're going to have, where we are going to discuss about what kind of a trader you are and how many types of traders are there in the market, especially to understand the patterns. Okay. At the end of the sessions, we will be having a quick discussions, okay, about the webinar. Anything or any questions that you have, you will be mentioning it in the chat box, and I will try to answer as much as possible. All right. So without wasting much time here, let's begin with a topic which is types of traders. Now, what is the first thing that strikes to your mind when you hear about trading? So, you might think about making money, right? Or you might think about people lose money, again, right? You might think about that it's a very big financial market. So these are the thought that comes to one's mind. This is one of the thing. What is the second thing is that now the second thing is that you have to understand your own self first. So what we are going to do is that we are going to understand ourselves and going to talk in brief about it. All right. That what kind of a trader are you? Now there are four types of traders. All right. So first trader is a scalper. Second trader is the day trader. Third is the swing trader. And fourth is the position trader. Now we are going to talk and elaborate. I'm going to talk more about it and I'm going to elaborate this that what kind of a trader are you? So what are you going to do is you're going to analyze yourself and understand that which category do I belong to in the trading segment. Now why it is this important is because it will help you to give that time for yourself and to know that okay, this time is suitable for me to trade or this is my behavior thing. It will help you to analyze your own self and it will give you an idea that how you can trade. And trust me, there are very few people who will talk to you about this, but this plays a very important role when you are trading, and especially if you are a newbie, because you don't know what you're doing. You are just blindly following either somebody, or you're just listening to half of the things or half news, entering the market at any point of time, exiting the market at any point of time. So this is very important. If you are new to forex market, make sure that you have to understand that what kind of a trader are you. So moving on to the slide, we will begin with the topic. All right. Now there are around 8 billion people in the world. All right. Now not every person is same. Individually, every person is different. So that is the reason, we have an eye scan or a fingerprint detection, because every person has different fingerprint. Even the twins who are identical will not have a same fingerprint. So every person is unique. So some might like Chinese food, some might like pizza, some might like only I'm an Indian, so some might like only dal chawal. So depending like what kind of a personality also, everybody is unique. So understanding what kind of a person you are is very important. Now, trading is the same way. Our unique personality will define us and let us know what I am doing different from the other. Now, maybe you are a person, okay, person A might be a person who is a very aggressive trader, who might get hyper and is like, no, this is not the thing, I should close my trade. No, I should enter the trade now. So you are an aggressive type of a person. But at the same time, there is a person B who is more relaxed. He's like, okay, let's wait, not today, tomorrow it will go. Okay, let's wait, the third day it might go. Or let's wait, it might go after 6 months. Or let's wait, it might go after a year. So it is very, very important to decide what kind of personality trader are you. Okay, now there are some traders who like to win small accounts, so they will win amount of $2, they will close the position, of $5 they will close the position. Now there might be some traders who doesn't mind doing big trades. So when I say big gains, huge gains, it means they might buy huge quantity, like they will take 100 loss, they will take 500 loss, they'll make $10,000 profit or $30,000 profit. So again, all these things is decided what on the basis of your personality. So there are variety of approaches that a trader has to determine. Okay, now it is just not making of price profit. It also interrupts how you are managing your trade. Okay, so you have to understand that what approach are you going to use to do your trading. Now, the point is that, as discussed, that no two traders are alike. Even let's say if you have people or if you are a group of friends who are trading, okay, trust me, your trading pattern will never be same. Even if you have bought at same price or following the market at the same thing, you cannot, there will be something else, like you might be a person who would not wait for the end of the trade to end at a particular price, you might just close it in between. So you are a kind of a, but your friend might wait, he might have his own technique, he might have his own analysis. So every person is different. So is that a bad thing? No, not at all. It's not a bad thing. Why it is not a bad thing? Because our uniqueness is what makes the world go round. So it is important to know your lifestyle and personality to help identify the strength and the weakness of trading. So it is very important. Okay. So first type of trader that we'll be discussing today is scalpers. Okay, scalping. Now, what is scalping? Now, scalping is something like if you are a person who loves thrills, like who likes horror movies or who likes the roller coaster ride, or who are a very adventure kind of a person who likes thrills and is always hyper at a fast pace of doing things, very exciting, every time just moving on, moving on. You're not a calm kind of a person, so you belong to a scalping category. So what kind of a trade you can do is scalp trade. Now what is a scalp trading? Scalp trading means it is a very short term trading, very short time. So probably it is a 1 minute or of 2 minutes or 3 minutes. Immediately the trades are opened and closed. Trades, new positions are created, and within 1 minute the new positions are closed. So it is very small amount of pips. So you don't look out for huge profit. So if you book $1, okay, fine, you close it. If you book $3, okay, fine, you close it. So now that kind of trader is what you're doing is you're literally trying to scalp the lots at a small profit. But what you're doing is like instead of having one trade in a day, you might have 100 trades. So in that, looking out for a huge gain at one time, putting a trade and waiting for $100 at a time, what you will do is like you will do 100 trades and you will book $1, $1, $1, $1, and that is where how you are going to make profit. So this kind of a trader is called as a scalper. This is a funny photograph. Why it is called as a scalper? Because it indicates your scalp thinking and exciting and thrilling and every time just running at a space of achieving numbers. Now, why does scalping is so attractive? Sorry. Okay, why is scalping so attractive to the traders? Why do most of the, now if you have come across traders, you might have seen that people are always either on the desktop or on their phone, always putting sales order, buy order and selling it, and always on the phone trading. Now what happens here? Why people prefer scalping is like smaller move happens more frequently. Now, if you have seen a MetaTrader 5 platform or if you have seen a live trading account, that is the reason it is very important whenever if you are a newbie trader, it is always good to have a real account, because what happens, I understand demo is a practice, but when you have a real account, what happens is like it actually takes out your emotions. You can actually feel what is going on. You will understand the market. Your risk factors would be less. So it is easy for one person. Like even if you have registered, make sure start with a small amount of $1,000 account and start trading, because you will trade and you will understand your factor, because it is your money that you have put in a demo account. It is not, because it's a virtual amount, so it will not give you the feel, the emotions would not be the same. So similarly, when if you have seen a market, coming back to the point, if you have seen the real account, okay, you will see that the movement is every second the market is moving up, down, up, down, up, down. So what is this? This is an opportunity market where the person enters the market, close the trade, again enters the market, close the trade. It means that the more the volatility in the market, the more the volumes in the market, the more small movements will happen, which a scalper can benefit. So, as said, instead of looking out for 1, 2, 3, 5 trades, what does a scalper does? A scalper looks out for 100 trades in a single day, and he tries to book small profit. What important point, what do the scalper does? He doesn't keep the position open, he closes all the position at the end of the day, because everybody wants to sleep in peace, doesn't want to get stressed. So a scalper will close all the position at the end of the trading day, because tomorrow might be a new day, new news, new fundamental analysis, new technical analysis, so they will try to close all the position at the same day. Now, because you are a scalper, what is the thing? You have to be in front of the chart 24 by 7. If you are a trader who is a scalper, who wants to make 100 trades in a day with a small profit, you need to see the chart every second. So now, if you are a person who have so much of time to spend, then you are a person who can do scalping, because it requires intense focus and it requires a very quick thinking to enter the market and exit the market, because you have to be in front of the system to open trade and close the trade. Not everyone can handle such fast and demanding trading. Now you have to be super quick to do that, because if you miss out on that point, there might be, you might lose the opportunity to book the profit. So now what is the thing? You have to analyze that. Are you this kind of a person who can give so much of time? Are you the person who can be in front of the system to watch the market? And if so, then you can consider yourself as a scalper. Now, it is not, this is again, I said that as I said previously, that it is not for the person who is trying to make big wins. It is a small wins, multiple small profits, multiple small lots, and making profit is the important thing for scalping. They don't look out for big wins, they look out for small wins, and they try to close the positions at the end of the day. Okay, now scalping focuses what more on the larger position size. So when I say larger position size, it means, so let's say if you have a $100,000 account, for example, what you will do is like you will take two lots, and if it goes $200 profit, you will close it and you are done. So you book 200 profit. Again, when you find the opportunity that from here it is going to go more 2 points up, you will again enter the market. You will buy two lots, three lots. So I'm going to increase the size of the lots. If you have attended my first session of webinar, I had discussed about what are lots and how are the units in that. Okay, so accordingly, you will be booking big lot size with a small profit. Now, the assumption is that the price will complete the first stage of the movement in a short span of time. So you aim to take the advantage of the market volatility. Moving on, what kind of instruments that you can trading in scalping? Now you should always look out for currencies which are always volatile, where people are trading in volume. So most liquid pairs are what? like Euro USD you can trade it, because JPP USD you can trade it, USD CHF, USD JPY. Why? Because there is a lot of trading volume. When I say trading volume, what does that indicate? It indicates people participations who are trading, who are buying and selling are very high. So you, for a scalper, if you're a scalper, the busiest time of the day you should trade. And I've mentioned the time here. What are the sessions? The sessions times are from 2 a.m. to 4 a.m. and from 8 a.m. to 12 noon EST timing. So at that point of time, you can actually trade. So considering when, like if you are a gold trader and if you want to see a market movement, you log in and you see 5 o'clock when the Dubai time, 5 o'clock, you will see there's a lot of market movement in the gold, because dollar index market opens and there's a lot of volume and trading happening. Then there's another thing, like day before yesterday, yesterday, there was a CPI report. So when there's a big report coming in by the Fed, so what happens? There's a big movement at that point of time. So these are the times, actual times, where the scalpers can take advantage and can make big profits. Now, very important thing, profit is there, but what plays an important role is your good money management. I have also spoken about in my previous session about managing your money, how you can manage your risk. Now, this type of scalping trading, if you are doing it, okay, in a day, especially if you want to do small trades, you have to understand that your risk management should be considered while trading. It is very important. Okay. In fact, not only scalping, overall, whatever kind of a trader you are, risk management is something that you should tie a knot, and you should always keep it in your mind that okay, risk management is something wherein I can go and make sure that my account goes for a long time and doesn't liquidate. Okay. The other factors which helps for a scalper is what? Major news. As I already said, that when there's a CPI report, today again at 7 o'clock there is a report of consumer assumptions of what people sentiments are towards market, whether it's going to go up or down. So at this point of time, there's a lot of volatility during times of wars, during times of inflation, during times of recessions, and these kind of fundamental news also impact a very unexpected price jump. So probably if you're sitting in the market today expecting it to gold, and tomorrow Putin makes a statement or a Biden makes a statement, then the market might reverse at any point of time. So you have to be prepared, and you should have enough fund in your account. Your risk management should be good so that you can trade safely. Now, we have already discussed what is scalping trading. Second trading is what? Second trader is a day trading. Now, what is day trading? Now, day trading involves that you are going to open a position and you're going to close a position in that particular day. So you will get up in the morning, you will analyze your market or instruments, whatever you want to trade in, and you're going to open a position, and you're going to keep a watch until end of the day, and you're going to close the position. Now this is a very popular trading, day trading is a very popular trading strategy, where you can buy and sell over a period of, in a single day you can have small, even if there's a small profit of $15, $20, you can book your trade. Now what is day trading? Is a very short term style of trading. Scalping is what? Scalping is you book one, then you take another trade, then you take a third trade, then you take a fourth trade. That is scalping. What is day trading? You are only taking one trade and you are closing the trade at the end of the day, and you are done. So probably you will make $15 profit in that one trade. You are content, you opened it in the morning, you close it in the evening, and your trade is done. Okay. Now these traders are very particular, because you have to make sure that in the morning or in the afternoon, when you have to enter the trade, your entry point is very important and your exit point is very important. So even if it is a profit or a loss, a day trader will always close the position at the end of the day. Now, day traders, what? They don't like to hold again the trades overnight. They will close their trade, irrespective it is profit or irrespective it is a loss, they will close their trade. Now, day trading is suited for whom? It is suited for the people who can give time and analyze the trade. So, as said that if there is too much of volume in the market, if you are a trader, what you will do, like today there is a 7 o'clock, there is going to be a report. So you will go through all the fundamental news, all the technical news, and on that basis of that analysis, what are you going to do? You are going to exit your trade at the end of the day. So it can be before the news or after the news, whatever your analysis, your set target price, and then you will exit the market. So these kind of people, they rely on traders, day traders, they heavily rely on technical analysis when they are executing their trades. So short term prices. So like you will make only one trade, you might you will wait for a movement of 15-20 points, and then you might close the trade. Now, some things that you have to consider, okay, if you decide to do a day trading, you have to have, as said before also for scalping also, that irrespective what kind of a trader you are, your fundamental news is as good required as much as a technical news is required, because the price movement also happens because of the fundamental news. So you will have to keep yourself updated with all the latest economic news so that you can take your trading decision at the beginning of the day. So when you're entering the market, so today at 7 o'clock, I know there is a report, or at 5 o'clock, there is a report. Fed is going to talk about the consumer price index. So I have to be mentally prepared as a day trader that okay, this is the entry point I'm going to exit, and before so and so I think it is going to give me so much of profit, and I will exit my trade. All right. Now, you have to ask yourself a question. Do you have time to monitor your trade? If you are a full-time job person, okay, then make sure day trading is not for you. Why? Because there are high chances if you open your mobile and check trades, or if you log into your desktop, then your company manager might fire you also. So it is very important that in the day trading, what happens, any fundamental news, technical news plays a very important role, and you have to give time to look at the charts. So if you are a person who can give that time to look at the charts, then you are considered as a day trader. Now in day trading also we have different types of trading, okay, which I will explain you in brief. The first is the trend trading. Now what is a trend trading? Now trend trading is like you will decide a frame zone. A frame zone means you will have your levels, support, as you have your support and resistance. I have also discussed about support and resistance in my previous sessions. So if you have attended it, you know what support and resistance is. So you will have your time frame, and in that time frame, you will tend, so like your time frame is, let's say, 60 minutes or 1 hour. In that time frame, you will look out for short term sale, that in 5 minutes, how much movement will happen. In 15 minutes, how much movement will happen. And using those short term indicators, what are you going to do? You are going to enter the market and book your profit. So this kind of trading is called as a trend trading. So I have given you a chart to analyze it very well. You see this, the zone, this and this is one zone, this and this is one zone, and in this zone I have these two small lines inside, red and blue line. What are those? Inside those black lines I have the blue and the red line, which are the short term trading. So this is the entry point. From here, the entry point, what I am doing, I am seeing, look at this small green and the red ones. These are the short term entries which I am looking out to enter and exit the market. Okay. Moving on to the next slide. The second kind of a trading in day trader, if you are a day trader, what is the second type of trading that you can do? You can do a counter trend day trading. Now, what is counter trend day trading? It is exactly the opposite of what you're thinking. So now let's say you are thinking that today gold is 1750 and it is going to go $1800. So once it reaches 1800, you are a person who is going to short from 1800, because from that point of time at a high point you're thinking from there it is going to fall down. So what is the idea is, the idea here is to find end of the trend and enter the market in the reverse order. So you're going to always do it in a reverse way. So here is the example that I have shown here, that now let's say considering that here the market has reached around 1.4812, and now from here what you are doing is that you're going to follow you're going to have a short selling trade, you're going to short your trade. So you are always thinking about opposite. Once it reaches its target, from there you're going to do opposite. You're not going to think that it is going to go up. Now this kind of trade is, it is very risky. Okay, first thing, it is very risky. But if you are very sure, and if your indicator or your technical analysis is so sure about it that the market is going to reverse, you will end up making huge profits. Okay, third type of trading. So in day trading we have already done, I've spoken about day trading, then the trend trading, and then I've spoken about counter trend day trading. Now the third is range trading. Now what is range trading? Range trading is like a channel trading. Now channel trading, it's a day trading strategy where you will understand the price action. What you will do is like you will see the chart patterns. Okay, you will see how much high it went and how much low. So you will wait for it to go high, you will book the profit, and then again you will wait for it to go low, and then you will book the profit. In this, what happens if the price has been rising above the support level and again falling back to the resistance? Okay, so from support it goes to the resistance, and from resistance it again falls down. In between, you will have a small kind of opportunity to book trades. What are those called as? Range trading. Now, every time in range trading, each time price hits high, it falls back to the low and vice versa. So again, here in the chart, I will show you, this is the resistance and this is the support. Now see, from this point, it is going back again. And then this small kind of trade is what you're going to book. Again, you're going to make profit, and again it comes back down. Again, it will go. So what is it doing? It is touching the resistance here, and again it is coming to the support. It is touching the resistance here and coming back to the support, touching the resistance here and coming back to the support. So what is it? What goes up comes down. That is called as a range trading. Okay, now the next type of trading is a breakout trading. Now what is a breakout trading? Breakout trading means that you are looking out for pair trading. Okay, now specifically at during the trades, your goal is to set up, okay, that whatever pair that you are trading has been in tight range. So it is very small tight range. I will show you directly the graph here. It will be easier for you to understand. So you see this small kind of candles here which has been created, these kind of small candles. So again it has its own zone, and in that you will have multiple small candles, this kind of candles. What does this indicate? It indicates that the market is not moving, there is hardly any movement. It means something is going to happen. It is either going to fall down suddenly, or it is either going to go up suddenly. So you see there are small charts created again here, and then there's a sudden big fall. Again there's a small charts created, and it is again going up. So if there is a very tight trading and you see there might be a fall, either fall or it might go up, this is called as breakout trading. Now what is another type of trading? Other type of trading is news trading. Now with this word itself you will understand that what does news trading indicates. News trading indicates about that you have to listen to the fundamental news. Understand, my friends, that this is very important. Technically, yes, technically 70% to 60%, trades are accurate, but at the same time, fundamental or news plays a very important role when you are trading, especially if there are big news or reports coming out. Okay, so now news trading people, what do they do? They will only decide their trades on the basis of the news. Now this news, so they don't have so much of knowledge about technical or charts. What they do, they now in the morning now they have this particular day, government is going to decide about the oil rate hikes, or they might talk about the dollar index price. So these kind of economic data which is released, like an unemployment rate, interest rate, inflation, any war or any recession, all this kind of news. So when there was a COVID hit, if people were aware about the oil prices or about dollar index at that point of time, such kind of people who relied on fundamental news had a good track, and there were many people who were able to make huge profit because of the news, because their indication was accurate that oil price is going to go up or dollar index is going to fall down, this there's going to be a recession. All these factors had been determined, and then on that basis people had made good profit. So to do well with news trading, all the day traders who are there, they will have to have a very good understanding of the market in which they are trading. Now they develop the insights to determine how the news will be received by the market in question, in terms of the extent to which the price will be affected. So what will they do? They will always sit this news trading people who are a kind of a people. See, when I'm talking about these kind of traders, make sure that you assume yourself that what kind of a trader are you. So now the thing is that you will have to look at the news. Now, what is the drawback of the news trading? Now, the drawback is like that there can be an extreme movement in this. If it is not accurate, there can be an extreme movement. So let's say in a day, if the movement for any instrument, like for gold, if it is just $30 or $20, because of news or any fundamental news, what happens? The price movement will be $100, $150. So it is that huge. So again, what is important is your money management. So more often than not, the expectations of such events are factored into the price in the run up to the announcement. I'm sorry. All right. Moving on. So these were the kind of the day traders. So we have done with scalping, we are done with day trading. Now the third is, in day trading, we have done multiple kinds of trading pattern that you can do. Okay. Now moving on to the next is the swing trading. Now what does your mind think of when it is swing? Swing, it means it's like it goes up and it goes up and it makes a curve U and it goes again up, right? So this kind of trading is called as swing trading. Okay. Now swing trading is a style that is used by forex traders who try to profit from price swings. Okay. It is a trading style which requires a lot of patience to hold your trade for several days and time. So swing traders identify a possible trend and then they hold the trades for a period of at least minimum 2 days to several weeks. Now for whom this trading is idle, it is idle for those who can't monitor their chart throughout the day but can dedicate a couple of hours in analyzing the market through the day or through the night. So if you are a person who is fine with giving an hour to look at the chart in the morning or in the evening, then you can consider yourself as a swing trader. Now swing trading is best suited for whom? For the people who have full-time jobs, or if you are a housewoman who is the full housewife who is also working during your, if you have children when they go to school, then if you can manage time to see the chart at that point of time, So you are the person who can consider yourself as a swing trading. Now, swing trading strategies employ fundamental and or technical analysis. So both you can consider. Every trading pattern overall in trading understand as much as technical is important, fundamental is also very important. Okay. Now it is to remember that every trading style has its pros and cons, and it is up to you that what kind of a pattern that you're following and which one will give you a better understanding and will give you profit. And it is not a one day trading. When you're following certain pattern, you have to give time for yourself, follow it religiously and understand if that pattern suits you. Now, last kind of a trading is a position trading. What is a position trading? A position trading is a person. So, if you are a person who is very calm and very relaxed, you can actually put a trade and you can go for a 3 months vacation or a 5 months vacation, relax yourself. Then you are a person to go for position trading. In position trading, what happens is like whatever the movement is, it will not impact. You will enter the price at a certain point and you will wait for your target to reach. So let's say if you are already a trader and if you have traded in gold during this war when Russia and Ukraine war had happened, gold has crossed $2,000. Now I have a lot of clients who have short gold from $2,000 and expecting it to go to $1,500. So now in between, gold already went $1,600. But these kind of traders are so certain that it will not impact them. They will hold the trade until it reaches its $1,500. So it has that. In between, they can actually there are many opportunities where you can book the profit. But position trading is something that your target is set, you will take it and you will wait for your target to be achieved at that particular point. So this can take several months, years, and your trade will be open. Okay. This is more you can consider yourself as investing. Okay. Because the difference is that investing means you simple like you look out for you invest in something and you forget about it, and once required after a few months you will only think about it for to removing it. Positional trading is exactly the same. What this kind of person needs is to be extremely patient. So if you are that kind of a person who is relaxed, that even if you have a fight with your partner, you are okay not to react and you are patient about it, then you belong to a category of position trading. Okay, but again, position trading requires a lot understanding of the fundamental news. When I say fundamental news, it means that you will have to understand the economy of the country, what is happening, what is the production rate, what is the consumer rate, what is the employment rate, what is so in detail, so that you know that you can hold your instrument for that long period of time. Okay. Now, fundamentals dictate the long term trends of the currency pair, and it is important that you understand how economy data affects your country and their future law. All right. So now because you're holding this position of your trades, okay, your stop loss will be if you are putting take profit and stop loss. I've also discussed what is take profit and stop loss. Okay. So if your stop loss will be extremely high. So as said that imagine if you are short from $2,000, your take profit is 1,500. Your so stop loss will be how much? If you go for 2:1 ratio also, if your profit is 300 points, so your stop loss will be at 150 point, right? So you have to take so much of risk of 150 point for it to close. So you must, for this kind of trading, again, you need a very huge capital. So your account should be well capitalized because your range of trading is very high. Your take profit and your stop loss is very high. You will see a huge ample amount of swings happening. Okay, but you should be ready and you should trust yourself for in your analysis, try to remain calm at any point of time. You have to trust your instinct that okay, this is what it is, this is my analysis, and I know this is going to happen, and you have to wait unless and until it reaches your target. So I hope now that you have understood and analyzed yourself that which category that you belong to. Once the session is over, once we are done with the chat, take down a pen and a paper, write it down, understand yourself that what kind of a trader are you, because this will help you to understand yourself and put trades and be in the market with with a better understanding. Okay. So again, four trading style: scalper, day trader, swing trader, and positional trader. All right. So I finished my session here. What we will do is like I will have a quick chat session where I will discuss about the questions that you will ask me. So please feel free to jot down your question. So please feel free to jot down all your questions in the chat box here, and I will try to answer all of them. All right. So on your right hand side, you will see the chat option. So please shoot on. Prema Devi. Prema, I hope that you did hear my session. Roylan, hi. So Roylan, good question. What is the suitable time frame to use if you decide to be a day trader? Again, I said that day trader needs a time to look at the charts and technical analysis. So you decide the market, what instruments you are into. Market is open for 24 hours, but if you are a person who is trading into dollar, then you will have to look out. Dubai time it is 5 o'clock. The markets opens. If you are a gold trader, then again 5 o'clock is the best time to see the market volume. Again, for a day trader, as said that one position if you want to open, because a day trader will only do one position, so you have to see the analysis of the market in the morning. Okay, and at the end of the day you have to trust your analysis that this is the target, this point it is going to go, and then you close your trade. So any market is suitable because it decide you are going to decide it in the morning and you're going to close the trade at the end of the day. I hope that is answered well. Roylan, I hope that is answered here. Any other question, guys? 15 minutes. 15 minutes is best. It gives you an idea, Roylan. So, okay, you're talking about the trending zone, then 15 minutes is the best. 15 and 30 minutes, both are best, but 15 minutes is the best. It gives you a fair idea about it. Great. So, Mohammed Sinan have a question. By trading on 15-minute chart, which other time frame should look to understand the movement. 30 minutes is good and 15 minutes is good to understand, to same as I said that in that time zone it gives you a good indication about the market in which zone and how it is going to happen. So 15 minutes is the best. However, you can also consider 30 minutes. I hope that has answered more. Great. Any other question, guys? Uh, Kumugisha is saying that understanding. Thanks. All right, Kumugisha, pleasure that you are understanding, and I'm hoping that that you will start an account and invest a little amount and make yourself understand. Guys, understand that trading in a real market is a different, completely different comparatively to a demo trading account, because demo trading is just a virtual thing. It will not, you will not understand your emotions. When you put in money in something, your emotions comes out, your reaction comes out. You understand your body, that what is happening and what is not. So even if you want to learn, the best learning is by having a real account and starting with the $1,000 and doing it. Yes, you can. Make sure that whatever amount you're putting in, you manage your risk and do it. Go for a very, very minimum loss. As a beginner, as I say, that you should only go for 0.01 unit and trade. That is the safest, because it will help you to understand also at the moment. Go for one trade at a time, understand what are the calculations. On MT MetaTrader 5, all the calculations are done automatically. However, if you are a newbie, on my YouTube channel, you can see I had discussed previously about margin trading, where all the formulas has been shared on this slide. So make sure that you log in, jot down all the formulas, and when you're trading in, compare the calculation and see if it is working for you now. See, guys, these are the small things which will help you to learn and understand trading in a better way. All right. I've shared the link here. My friend has also shared, a colleague has also shared a link here. Okay. For the previous sessions, if you have missed on, there are a lot of things that I've discussed previously also, and I will be conducting, planning to conduct, as time permits me, I'm planning to conduct a free live trading session, okay, which we can trade and understand how it works. I hope all the questions are answered. Any more questions, guys? Also, our office address is mentioned, my direct number is mentioned, my email address is mentioned. Please feel free to connect if you have any doubt or any questions in your mind. You might have been contacted by the relationship officers. If you have their number, please connect with them. Or just in case if you don't, my number is mentioned. Please feel free to connect with me. And definitely we are here to help you out and to make you understand how you can trade in forex market. So I think all the question has been answered, and I don't think there is any more questions that is coming in. So what I'll do is, like, I'll just end up this session, and we will connect soon with our next webinar session. All right, next Friday. I will see you all there, and hoping that you start your account and start trading and understand how it works and start learning. All right. Till then, have a lovely evening and happy weekend to you and your family. Take care.